I'm Danielle Hale, Chief Economist at Realtor.com. As we move towards spring and the most active season of the housing calendar, here's what you need to know. Economic growth is still strong, and that's reflected in still robust labor market readings. Although January's blockbuster job growth was revised lower, payrolls still grew, and the U.S. added another 275,000 jobs in February. Unemployment ticked higher, but wages continue to grow faster than inflation. All in, the labor market looks to be on solid footing. Annual inflation continues to surpass the Fed's 2% target, with both energy prices and shelter costs contributing to the gain. Shelter inflation decelerated somewhat, but is still too high. Rents are an important contributor to measured shelter inflation, and Realtor.com data, which show that rents are easing, suggests that we'll eventually see this reflected in inflation metrics. Against this macro backdrop, the Fed held rates steady following its March meeting. Its updated economic outlook still anticipates policy easing before the end of 2024, but implied that the policy rate might decline more slowly in 2025 and 26 if economic growth remains higher and inflation declines more slowly, as currently expected. Mortgage rates, which had eased in early March, ticked up mid-month. However, the post-Fed meeting decline in 10-year yields suggests another pivot could be in store. Taking a big step back, mortgage rates have hovered in a 6.6 to 7% range since late December and are likely to continue in this range until economic data more clearly delineate whether a hard or soft landing is ahead. Research from Hannah Jones suggests a potential hack for those looking for a below-market mortgage rate. Assumable loans, mortgages that allow a buyer to take over a home seller's existing mortgage, including its current rate, are the default for certain mortgage types, including FHA, VA, and USDA loans. They aren't for everyone because of the additional paperwork and advocacy required from the buyer, but as many as 1 to 3% of sellers in some markets are advertising this feature in their listing description. Turning to housing data, there are promising signs. Realtor.com's February Housing Trends Report, compiled by Sabrina Spianu, showed that not only are active and new listings again on the rise, we saw an even bigger uptick in the number of homes priced in the $200,000 to $350,000 range, below the current median list price. Home prices continue to advance, and time on market remains low. Both buyers and sellers took advantage of increased inventory, and existing home sales surged to their highest pace in a year. Sales prices also moved higher. These February closings reflect home shoppers who likely locked in some of the lowest mortgage rates in the last 6 months. The pickup in sales has propelled builder optimism and an uptick in construction activity in February that brought single-family starts to their highest level since April 2022. While the housing market balance continues to favor sellers in just about any week of the year, sellers can leverage predictable seasonal trends to plan to maximize their odds of success. Realtor.com's Best Time to Sell report identifies the best week to list your home for sale in the U.S., as well as many major markets. Finally, the recent addition of heat, wind, and air quality data to the environmental risk experience on Realtor.com gave us the opportunity to dig into what this means for housing. Jai Shu led the Realtor.com Housing and Climate Risk Report, and I had the opportunity to share our findings at South by Southwest in Austin on a panel about how climate change is shaping the ways that people find a home. I was joined by a UT professor and climate researcher, the founder and CEO of First Street, a leading climate risk data provider, and a Tampa-based real estate leader. You'll find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates.